Here we are continuing from our previous video wherein we have calculated the invoice value of output of Rohit. We will be proceeding towards the calculation of GST tax liability and the net outflow in this video. So let's move towards our calculation. So far we have calculated the invoice value of output of Rohit. So now what we need to do is we have to calculate the GST liability under normal scheme and composition scheme. So ಅದೇ ಕ್ವಶನ್ ಅಲ್ಲಿ ಕೇಳಿದ್ದದು. So we will be using the same table. Previous calculation ka continuation we are doing in the same table. So what we need to do is you write tax liability. So here we are calculating tax liability. First under normal scheme which we have already calculated previously. So normal scheme under ಅಲ್ಲಿ ರೋಹಿತ್ ಗೌರ್ಮೆಂಟಿಗೆ ಎಷ್ಟು ಟ್ಯಾಕ್ಸ್ ಅನ್ನು ಕ್ಯಾಲ್ಕುಲೇಟ್ ಕೊಡಬೇಕು ಅದನ್ನು ನಾವು ಇನ್ವಾಯ್ಸ್ ವ್ಯಾಲ್ಯೂ ಆಫ್ ಔಟ್ಪುಟ್ ಕ್ಯಾಲ್ಕುಲೇಟ್ ಮಾಡೋದಕ್ಕಿಂತ ಮೊದಲು ಆ್ಯಡ್ ಮಾಡಿದ್ದೇವೆ, ರೈಟ್. ಸೊ ಆ ವ್ಯಾಲ್ಯೂವನ್ನೇ ನಾವು ಬರೆಯೋದು. ಸೊ ರೈಟ್ ಜಿ ಎಸ್ ಟಿ ಪೇಬಲ್ ಅಂಡರ್ ನಾರ್ಮಲ್ ಸ್ಕೀಮ್. ಸೊ ಜಿ ಎಸ್ ಟಿ ಪೇಬಲ್ ಅಂಡರ್ ನಾರ್ಮಲ್ ಸ್ಕೀಮ್ ವಿ ಹ್ಯಾವ್ ಆಲ್ರೆಡಿ ಕ್ಯಾಲ್ಕುಲೇಟೆಡ್ ಟು 120 ವಿಚ್ ಇಸ್ ಅ ಕಾಸ್ಟ್ ಆಫ್ಟರ್ ಇನ್ಕ್ಲೂಡಿಂಗ್ ಮಾರ್ಕಪ್. ಅದಕ್ಕೆ ನಾವು ಜಿ ಎಸ್ ಟಿ ಪೇಬಲನ್ನು ನಾವು ಚಾರ್ಜ್ ಮಾಡಿದ್ದೇವೆ ಅಟ್ 18%. ದಟ್ ಸಮ್ಸ್ ಅಪ್ ಟು ಅರೌಂಡ್ 21.6. ಸೊ ಆ 21.6 ನಾರ್ಮಲ್ ಸ್ಕೀಮಲ್ಲಿ ಕೊಟ್ಟಂತಹ ಜಿ ಎಸ್ ಟಿ 21.6 ಲ್ಯಾಕ್ ಅಂದರೆ 21,60,000 ಅನ್ನು ರೋಹಿತ್ ಗೌರ್ಮೆಂಟಿಗೆ ಜಿ ಎಸ್ ಟಿ ಆಗಿ ಪೇಮೆಂಟ್ ಮಾಡ್ತಾನೆ ಅಂಡರ್ ನಾರ್ಮಲ್ ಸ್ಕೀಮ್. ಸೊ ಕಾಂಪೊಸಿಷನ್ ಸ್ಕೀಮ್ ಇದು ಕೇಸಲ್ಲಿ ಕ್ಯಾಲ್ಕುಲೇಷನ್ ನಾವು ಟ್ರಾನ್ಸಾಕ್ಷನ್ ವ್ಯಾಲ್ಯೂನ ಮೇಲೆ ಮಾಡೋದಲ್ಲ. ಸೊ ವಿ ಹ್ಯಾವ್ ಟು ಕ್ಯಾಲ್ಕುಲೇಟ್ ಆನ್ ದ ಎಗ್ರಿಗೇಟ್ ವ್ಯಾಲ್ಯೂ that is nothing but aggregate turnover. In other words, you can say in this problem context it is invoice value of output. So invoice value of output under normal scheme also we have calculated the last value ka total under composition now ka head and its value is around 137.28. So on that we have to charge the respective GST that is applicable to composition scheme. So next we have to charge GST on aggregate turnover. I'll write AGG turnover, aggregate turnover under composition scheme, under composition scheme. So that is on the invoice value. Invoice value was 137.28 which I have already calculated. On that we have to charge certain percentage. So as you all know that under composition scheme 3 types of GST is chargeable. So that depends on the type of business a person is doing. So since this is a case of restaurant business where Rohit is running a restaurant, the applicable tax rate is 5%. So that we have to charge here. So tax rate is 5%. So 5% GST is charged on the restaurant service provided by Rohit on the aggregate turnover or invoice value of output, and which will be equal to, use your calculator and find the value, so which is 137.28 into 5%. So 137.28 into 5% which is equal to 6.864 lakhs. So 6.864. So I'll just write 6.86. I'll restrict the values to second 2 decimal places. 6.864 you will get. I'll write 6.86. So that is the tax under which scheme? Under composition scheme. So now we are adding it up, which is 21.6 in the case of normal scheme and 6.86 lakhs in the case of composition scheme. So now the question is about input tax credit. As you all know, whoever opts for regular scheme, he will get input tax credit on the inputs which he has purchased from a dealer. So in the problems context under normal scheme, if Rohit is going for normal scheme, he will purchase input that they have already given. On that input he will get input tax credit. So input tax credit is the GST which is charged by his supplier. So that we have also calculated, and its value is input tax credit ka value that we have calculated in the first case where goods is moving from supplier to Rohit. Their supplier is charging a tax, and that is paid by Rohit to his supplier, and that is available to him as input tax credit, and the input tax credit ka value is 14.4 lakhs. So that is available to Mr. Rohit as input tax credit. So from this value you have to deduct input tax credit, which is equal to 14.4 lakhs, 14.4 lakhs, whereas in case of composition scheme, whoever opts for composition scheme, on his inputs, on the purchase of his inputs or inward supply, he is not entitled to receive input tax credit. So though he has paid tax to his supplier under composition scheme, he will not get any input tax credit because he has opted for composition scheme, if he is opting for composition scheme. So now we can find the net GST payable. So therefore net GST payable is net GST payable. So in the case of normal scheme, from total tax we have to deduct input tax credit. Input tax credit, as I said, it is 14.4. So the difference will be 7.2 lakhs. So 7.2 lakhs is the net GST payable by Rohit to the government if he is opting for normal scheme, whereas in case of composition scheme the tax liability will be 6.86. So if we see the net GST payable under composition scheme it is comparatively lesser, right? But remember, when it comes to these sort of a problem, we cannot make our interpretation or we cannot conclude on the question based on net GST payable, because after net GST payable we have to consider 2 points as we discussed in our previous video, that is the additional benefit or additional profit a dealer will get by opting for a composition scheme. So that value we have to find out. To that value and after finding out that value, we have to reduce that value, deduct that value from the net GST payable. We are speaking about net GST payable. Net GST payable is an expense which is paid by Rohit to the government, right? It's an outflow of cash. So in that case, whereas profit is like a revenue or income, which is an inflow of cash. From the outflow of cash, we have to deduct the inflow of cash. To that extent, the outflow is reduced. And after that, when it comes to normal scheme, generally there are a lot of documents to be maintained and there are other procedures to file the return as well. So because of that, comparatively compliance cost, that is to adhere to GST, there are certain costs to be incurred by the dealers. The compliance cost, we can call it. The compliance cost is generally more in case of regular scheme than composition scheme. If compliance cost is given, that has to be added to the total GST payable. So then we will get a value that we can call it as a benefit or net outflow. Based on the value of benefit or net outflow, we have to make a suggestion to the dealer whether he can opt for regular scheme or he has to go for composition scheme. So next what we will be doing is we are calculating the net outflow or benefit under the schemes, under the two schemes. Next what we need to do is we have to calculate the net GST we have to calculate the net outflow or the benefit. So use this format and write computation of net outflow or benefit under the schemes, and at the top of the table you write rupees in lakhs. Same, first column for particular, second column for composition scheme, normal scheme, and third column for composition scheme. First of all, the value which we need to write is the GST payable under normal scheme and under composition scheme, that we have calculated previously. Now I will be writing that value. Under normal scheme, the GST that has to be payable by Mr. Rohit to the government is 7.2 lakhs, which we have calculated before, and under composition scheme it is 6.86 lakh. Then I said we have to add the additional profit that can be generated by opting for composition scheme. So that value we have to add, we have to deduct, because this is an expense, this is a profit we are speaking about, additional profit under composition scheme, under composition, write compo here, composition scheme. So this value can be referred from the markup value which we have calculated. So if you see the markup value is, so the markup value which we are referring, markup nothing but the profit. So markup value under composition scheme is 22.5
8 lakhs. Under composition scheme it is 22.88 lakhs, whereas under normal scheme it was around 20 lakhs. It was 20 lakhs. That means if the trader, that is Rohit, is going for composition scheme, he will earn a profit of 22.88, whereas if he is going for composition scheme, normal scheme, he will earn a profit of 20 lakhs rupees. That means there is an additional profit in case of composition scheme, which is 22.88 minus 20, which is equal to 2.88 under composition scheme. Okay, now we will deduct the value, which is 7.2 here. When it comes to this is 8, 9, which is 3.98. So 3.98 lakhs. So to this value we have to add the compliance cost. So compliance cost, if given in the question, we have to add the compliance cost of GST, but under this, in this question, nowhere the compliance cost is given. At the end they have asked us to compute the tax liability under the two schemes which you have done, and suggest tax liability is here, and suggest which option is better. To suggest that option, we are going for this value, net outflow. So that calculation we are doing here. Nowhere in the question compliance cost is given, so in both cases it is nil or dash. So therefore we can say the net outflow or the benefit, net outflow or the benefit, you could say, if it is a negative value. So it is 7.2 lakhs in case of normal scheme, whereas that is 3.98 in case of composition scheme. So on the basis of this value, we are giving a suggestion to Rohit, and our suggestion will be, since the net outflow under composition scheme, that is 3.98, is lesser than the net outflow under normal scheme, which is 7.2. Therefore we recommend Rohit, who is running a restaurant business, can opt for composition scheme. So this interpretation or conclusion you have to write to complete the solution to these problems. So this is the final solution to this problem. So thank you for watching the video. If you like the video, please subscribe to the channel Avis Academy, and kindly share, like and give your comments on the video. Thank you.